Every halving cycle, they ask, is this time different? And the answer has always been no. But one thing that's most likely to be different is this episode, because I'm a little bit injured and a lot bit medicated. So if I sound like I'm drunk or I get my facts messed up, I apologize. I have not been drinking, but this should make for one entertaining next hour. So buckle up and let's get ready to stack those sats. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. Today is Wednesday, June 28th, 2023, and that means two things. It is Elon Musk's 52nd birthday, and it is DCA Wednesday. Are you ready to get that stack on? It is actually an important day here in my household as well, but we don't need to get into that. What we do need to get into before we get into the news is a look at the vital statistics. At the time of this recording, we are at a Bitcoin block height of 796,339, and Bitcoin is ringing in at a US dollar price of $30,125 per Bitcoin, or 3,322 sats per dollar, almost exactly where we were last Wednesday, about $45 US dollars more per Bitcoin than last Wednesday, or $1 is going to purchase you actually about $45 less than last Wednesday, and $1 is going to purchase you approximately 5 more Satoshis than it did just last Wednesday. TikTok next block, that puts us 43,661 blocks to the next halving, which is still looking like it's going to happen on April 21st of 2024. As you know, the next halving will occur at block 840,000, and when that occurs is, subject to how fast the next 43,661 blocks come in. In general, they're supposed to average 10 minutes, but they've been coming in in general a lot faster because as Bitcoin's adoption has been expanding, more miners have been coming online, more companies have been getting into the mining business, countries have been getting into the mining business, hash power has increased, and of course, there's a difficulty adjustment to try and compensate for that, but that lags. It's only about once every 2 weeks. So in general, blocks have been coming in over Bitcoin's lifespan a little bit faster than the 10-minute average, although, we've had periods where it slowed down and come in slower. But in general, as well as zooming out with the price going in generally up and to the right, hash power has in general increased, and block times have in general averaged a little bit less than 9 minutes between blocks. For those of you who are following this metric, Bitcoin's market capitalization is up about $500 million, ringing in at $584.9 billion. Last week was $585.4 billion. So even though the price of Bitcoin is down a tiny bit, the market capitalization is up because more Bitcoin have been mined. There are no more Bitcoin in existence. All Bitcoin in theory existed the moment the Genesis block was mined. But as you know, until the year 2140, every time a block is found, some of those unissued Bitcoin are doled out to miners as a reward. So the number of Bitcoin available in the circulating economy has increased since last week, which has increased Bitcoin's market capitalization. For those of you who value your wealth in shiny metal rocks, time is running out to convert those little gold coins into Bitcoin. It will currently cost you 15.9 ounces of Peter Schiff bucks, 15.9 ounces of gold, almost an entire pound of gold to purchase just one Bitcoin, up from 15.7 ounces last week and 13 ounces 2 weeks ago. So for those of you who are still clinging to your My Precious bucks, your shiny yellow rocks, time is running out. I mean, you get Bitcoin at the price you deserve, and right now that price is 15.9 ounces of gold. And for those of you who value your wealth in pizza, one Bitcoin will currently purchase you 1,684 large pepperoni pizzas from Papa John's. a heck of a lot of pizza, more than 4 years worth of one pizza a day for just one Bitcoin. So people that say Bitcoin isn't worth anything, well, one Bitcoin can feed your family for a little over 4 years. And that's just at its current value. So with the halving coming up and the next bull run coming up, it won't be too long before one Bitcoin will buy you a Papa John's, not the pizza, but literally a Papa John's or more. And speaking of vital statistics, the mempool continues to clear out. It still hasn't gone to zero, but there are currently only 33 blocks of transactions pending in the mempool. So even though Marty Bent has not quite won his bet with Matt Odell yet, it's getting closer and closer. Last week, there were 49 blocks worth of transactions pending in the mempool. The week before that was 69 blocks. The week before that was 92 blocks. So you can see the trend has been that those ordinals and inscriptions transactions are slowly but surely clearing out. And along those lines, if you want to guarantee that your on-chain transaction is included in the next block, it's currently looking like a fee of only 38 Satoshis will guarantee that your block is included in the next block. If you're willing to wait a little bit, a fee of 11 Satoshis per VByte will guarantee that you're included sometime within the next 24 hours. And a fee of 10 Satoshis per byte will guarantee that your transaction is processed within the week. Of course, that's subject to change. That is why I recommend that if you are not going to set a higher fee rate or you have a fee that, it's important that it goes through right away, that you either use replace by fee or get a more up-to-date estimate from a fee estimator. Mempool.space is estimating that a high priority transaction will go through for as cheap as 15 cents per VByte. That is only 63 cents to transfer. You could, in theory, transfer billions of dollars in wealth anywhere in the world almost instantly and uncensorably for only 63 cents. A heck of a lot cheaper than you can do a wire transfer or go to Western Union. Even cheaper than you could mail a check because, while 63 cents might be more than you'd pay for a first-class postage stamp, what people don't take into account are business checks are expensive. If you've ever owned a small business, you can't just use those free checks you get when you open a checking account. Most of you are scratching your head out there going, what's a check, right? Well, businesses still use checks. Checks are little pieces of paper that you give somebody that they can go take to a bank and deposit in lieu of handing them physical cash. And those business checks can cost about $1 a piece just for blank checks. When you have a business, you order a box of 1,000 checks or whatever, and they cost you almost $1,000. They average about $1 per check. So if a business wanted to write you a check for any amount, even if it was a check for just $1 and then mail it to you, in addition to that first class stamp, they're going to spend $1 just on the paper. So Bitcoin beats that hands down, even at a priority fee rate of about 63 cents to do that on-chain transaction. Suck it, Nassim, for your Bitcoin has no utility. And speaking of on-chain transactions, that transaction metric that I like to follow, it had been my favorite Bitcoin metric until the ordinals and inscriptions debacle, was Bitcoin's average 24-hour transaction rate, and that too is falling back in line, currently coming in at 3.79 transactions per second. Prior to ordinals and inscriptions, basically you would never see more than 4 transactions per second because most of the size of a Bitcoin transaction is, in the transaction itself. Segregated witness gave an artificial increase to the block size basically by taking the signature data and saying it didn't count as part of your transaction size and giving it a different transaction cost, weighting it differently for determining transaction fees. And that's what ordinals and inscriptions have been taking advantage of, is basically filling up the header space. And because of that, we had as high as almost 8 transactions per second coming through at the peak. I think 7.73 is the highest we've seen it. Prior to that, anytime we saw more than 3.15, that was usually a sign that there was a tremendous amount of on-chain activity because we were in a hype cycle. The price of Bitcoin was usually going up if that was the case, almost without a doubt, almost 100% reliably every time since the time since we've started doing this podcast. Without exception, every time we had seen the 24-hour transaction rate over 3.15, the price was going up. Obviously, that got skewed completely by the ordinals and inscriptions thing. But it looks like that's trending back to normal because 3.79 transactions per second is a lot closer to what we saw before Taproot enabled the whole ordinals and the transcriptions thing. And speaking of on-chain, we just had a difficulty adjustment in the difficulty it takes to mine the next block of Bitcoin. That was a relatively large increase. Let me confirm that real quick, because last week my Bitcoin notes were all messed up, if you remember, and I was getting into statistics and getting all jumbled, and that was not an increase. I left the little plus sign in the database. It was a decrease. It got 3.3% easier to mine the next block of Bitcoin. That's a relatively large decrease. And that puts us 1,997 blocks until the next mining difficulty, which is basically 2 weeks. Bitcoin adjusts its mining difficulty every 2,016 blocks. And so it just did so 19 blocks ago. So all of the estimates on what the next adjustment's going to look like are they're worthless, because, finding a block is a lot like flipping a quarter. You flip a coin, if you flip a coin 100 times, 50 of them should be heads, 50 of them should be tails on average. But you could flip a coin 5 times in a row and get all heads, because it's an average. It's a random number thing. And while the average law of average should work out in the long term, in the short term, it isn't always that way. And so the first 19 blocks have been coming in really slow, apparently, because the estimators are saying that it's going to get 9.3% easier to mine a Bitcoin on approximately July 13th, when the next adjustment is made. I would not believe that, because, like I said, that's only 19 blocks worth of data. However, those first 19 blocks have been coming in an average of 11 minutes and 33 seconds. I think that's as slow as we've ever seen it. I'm scrolling through the data here real quick, and I don't see anything. All right, well, a couple weeks ago, we saw them coming in at 13 minutes and 5 seconds. So that isn't the slowest we've seen it. But again, like I said, that's moot, because blocks average 10 minutes. I've seen him come in, I've seen him take 2 hours to come in before, and everybody starts asking, is Bitcoin broken? It's like, no, it's just doing its thing. And then all of a sudden you'll get 3 blocks that'll all come in simultaneously. And that's why Satoshi set that adjustment up for an average of 2016 blocks, because over a period of about 2 weeks, we tend to get reliable enough data that the adjustments have been able to function as intended and relatively smoothly, and we haven't seen anything weird happen with difficulty adjustments as a result. Real quick, thanks to those of you listening on your favorite podcasting 2.0 apps, such as Fountain app. As you know, you can earn sats just for listening to your favorite podcast by listening on Fountain, but it also enables you to support your favorite podcasts through the value for value model. And we don't have any boosts to read this week, but I know some of you are out there listening because I can see the statistics. And so I appreciate those of you who are listening and supporting your favorite podcasts and supporting Podcasting 2.0, because I used to listen to all my podcasts on Apple Podcasts, and then I started listening to them on Fountain just because Fountain was new. And that was before you could even earn sats for listening on Fountain. That was only when you could support your favorite podcasts. And I wanted to help support Podcasting 2.0. But now, with Apple getting all dictatorial and removing some of our favorite Bitcoin-centric apps from the App Store, I'm less and less inclined to use Apple for anything. So it's great to see people using Podcasting 2.0 instead of of what most people use still, unfortunately, and that's Apple Podcasts to listen to their podcasts. So again, no boost to read this week, but it is fun to see where our listenership is coming from, and our geographic breakdown of listeners is about the same as last week. The number one country is still the United States, with 52% of you listening from right here in the United States. So hello and thank you to my fellow Americans. Number 2 remains Argentina. 12% of you are listening from Argentina. That's down a little bit. Last week that was 13%, but still enough to keep Argentina in the number 2 spot. So muchos gracias, amigos from Argentina. I do appreciate that so many of you are listening from, I say down there because, Argentina is south from here, and when you look at maps, I guess you tend to think of north is up and south is down. So hello to my friends in Argentina. Thank you very much. Muchas gracias for being number 2 among our listenership. Number 3 remains Germany at 7% of our listeners. So Dankeschön to meinen Freunds in Deutschland. That is exactly the same number of percentage that we've had for weeks. Germany has been a solid third most popular listener destination. That is really cool. I have not been to Germany since the mid-1980s. I can't wait to go back. It's a beautiful country. And I do have that on my to-do list. As I mentioned previously, I had planned to go to Germany in 2020, but we know how that worked out, right? So maybe soon, hopefully as soon as next summer, although I'd really like to go for Oktoberfest sometime, or maybe around Christmas to see all those beautiful Christmas markets, even though I'm not a big fan of the cold, which is why I live here in sunny Central Florida. Number 4 remains Luxembourg, where 4% of you are still listening to us from. So muchas gracias. Danke, mein friends in Luxembourg, or Morgen, for those of you who speak Luxembourgish. Number 5 is a change. Sweden has moved up to number 5. Previously, Sweden was number 9. So we've got a boost in listenership from Sweden. And I still don't know how to say thank you or hello to those of you in Sweden. So somebody please reach out to me. Maybe send a boost. Maybe send a DM or an email. You can send us a DM at BTC Bulletin Pod on Twitter, or you can email me at bitcoinbulletin@protonmail.com and let me know how to say hello or thank you in Swedish, please. That leaves the bottom 5 in about the same order. Canada, of course, was number 5, is now number 6. So thank you very much, as Greg Foss says, those living in the attic of America in Canada. So thank you for listening. Number 7 is Spain, where 2% of you are still listening from. So muchas gracias, amigos, in España. Number 8 is Venezuela. 2% of you are listening from Venezuela. Muchas gracias, amigos. Number 9 is Colombia. Muchas gracias, amigos, in Colombia. It is really cool to see how many listeners we have in Spanish-speaking countries. And number 10 remains France. So merci to my friends in France. That's a second week you guys have been in the top 10, and you're holding solid at number 10. Of course, lurking down number 11 still is Singapore, with 1% of our listeners in Singapore. But that rounds out the top 10. So thank you very much to all my listeners everywhere. It is really cool to be able to visualize where you're listening from and to know that people are listening from all over the world. That's one of the really cool things about Bitcoin, is that Bitcoin is universal. And so our friends and followers are universal as well, and that's pretty cool. All right, back to the news. Is this time different? As we mentioned last time, Betteridge's law is the law that says any headline that ends in a question mark can be answered by the word no. And I would have to say in general, this time is no different. Even looking at the price action, people say, well, the halving isn't until a year from now, till April of 2024, and we've got this big price spike, so that's clearly something that's different. But it really isn't. I pointed out previously that if you look back at 2019, there was a big price spike from about $3,000 to around $13,000 at this exact time frame in the cycle in 2019. Then we saw a huge retracement down to as low as 3,500, I believe it was. And there were a lot of weird things that happened in 2019 and 2020 right around the halving. We had the Elon pump and then the Elon dump. And of course, we had the 2020 lockdowns, which interfered with everything, not just with Bitcoin. But even with that, the cycle wasn't radically different from what we would see. Instead of having a blow-off top, we kind of had the double top. Maybe that had more to do with the Elon pump kicking the cycle off early, or maybe it had to do with, the effects of the lockdown. Who knows? But the point being, if you zoom out in general, the last cycle looked just like the cycle before that, and I'm assuming that this cycle will look the same. There are those who believe in the theory of diminishing returns, and or the supercycle theory that says that either eventually the halvings will become so insignificant that they won't really have that supply and demand effect anymore. But even when the number of Bitcoin gets reduced from like 25 to 12.5 versus 6 to 3, yeah, that's fewer Bitcoin, but the price of Bitcoin goes up, and one Bitcoin's always worth one Bitcoin. And so even though you're going from 25 to 12 or 6 to 3 or whatever it is in the future halving, depending on which halving we're talking about, in general, half is always half. And as Bitcoin continues to be adopted more widely, that even though that half is fewer total number of Bitcoin, it's going to have an outsized impact. And I think that's part of the genius of the Bitcoin Core protocol. Part of the genius of Satoshi Nakamoto was that it took into account that when Bitcoin was not widely adopted, when it was just a handful of people running it on their laptops, he could dole out 50 Bitcoin at a whack. The protocol could dole out 50 Bitcoin at a whack. And that now would have a tremendous effect on the price of Bitcoin, obviously, because the supply and demand dynamic would be so much greater. But as Bitcoin's adoption has increased and the scarcity of Bitcoin correspondingly increases with those halvings, it's maintained a smooth up and to the right when you zoom out. So I'd like to say that this time will not be different. I don't think we're going to see a super cycle. I think we're going to see larger numbers, more institutional adoption, maybe a different type of hype, not necessarily more hype, but a different type of hype. But I would expect to see a new all-time high 6 months to 18 months after the next halving, just like we always have. But only time will tell. Nobody has a crystal ball, and we're not here to make price predictions. Some of the things that will be different this cycle is that MicroStrategy is certainly going to be vindicated. As you recall, MicroStrategy, Michael Saylor poured billions of dollars of his corporate treasury into holding Bitcoin as a corporate asset. And for the longest time, people mocked him for doing so. You know, he was seriously underwater for a while. You know, the Bitcoin in US dollar terms is worth a lot less than he paid when Bitcoin was low. In fact, people were even talking about the MicroStrategy liquidation point. At what point in time was MicroStrategy going to be forced to sell? And that answer was never, because most of that is bought through what are called convertible loans, which means they don't have to be paid back in dollars. He could just issue stock. So he was never at risk of liquidation. Anybody thought he was, just didn't understand. Maybe they hadn't done the research to know. But what's going to be different this time is that Bitcoin sets a new all-time high, even when Bitcoin just reaches its current, its previous all-time high of around $69,000. All that Bitcoin he holds with an average purchase price in the 20-something $1,000 range is going to be, it's going to inspire an entirely brand new level of FOMO. When all these companies look at a little company like MicroStrategy all of a sudden becoming one of the largest companies in the world exclusively on the back of their Bitcoin bet, you can certainly bet that's going to kick off a new round of corporate FOMO. And like most FOMO, all those companies will probably buy in at the peak, and maybe some of them end up getting wrecked and panic selling. But that, of course, remains to be seen. And speaking of Michael Saylor and MicroStrategy, Michael Saylor has doubled down. Well, not quite double, and this isn't the first purchase he's made during the accumulation phase, but Bloomberg is reporting MicroStrategy's Saylor makes largest Bitcoin acquisition since prices peaked in late 2021. MicroStrategy Inc. acquired about $347 million in Bitcoin during the second quarter, the largest purchase by the most prominent publicly traded advocate of the cryptocurrency since prices peaked in late 2021. So not only is MicroStrategy poised to be vindicated when Bitcoin recaptures its all-time high, but they are full speed ahead. They are stacking. He is stacking like a pleb. Hopefully you are as well, because obviously, right now is the cheapest you'll probably ever be able to buy Bitcoin for ever again if the cycle theory holds true. And speaking of stackers, another thing that's going to be different this cycle is El Salvador is going to be vindicated. Remember how much looking down at the tip of their noses the rest of the world did, the financial world did at El Salvador when they made Bitcoin legal tender. And then, of course, when the price of Bitcoin went below the average purchase price of Bitcoin on the day that Bitcoin became legal tender, everybody mocked Bitcoin, or they mocked El Salvador's Bitcoin purchase. They basically said it was a failed experiment, and that it was basically over. The only thing that we were waiting for is for the lady of large body mass index to begin singing. And it'll be interesting to see how that narrative flips, or if the media even covers it when Bitcoin's at a new all-time high and El Salvador are looking like the smartest people, the smartest leaders, the smartest financial planners in the world. One other thing that may be potentially different, and I don't see it as being dramatically different, was that if the ETFs that have been filed for recently, and there have been a whole bunch of them ever since BlackRock, kind of broke the dam by filing for their ETF. If the ETFs are approved, there will be more ways for the normies to buy. Maybe they'll be more likely to buy from their broker than to, quote unquote, invest in some alt scam, at least would be. They won't necessarily, maybe that's the silver lining. I think there will be more people that will be purchasing Bitcoin through their brokers and, Bitcoin exposure, that is, paper Bitcoin, not your keys, not your Bitcoin, obviously, but there will be people buying these ETFs, some of which will be buying with funds that they should and have the ability to just be buying and holding Bitcoin with. Some of them, like pensions and people that are, they're going to be investing in their Roth IRA and their 401k for tax purposes, will be investing money that they haven't been able to invest in Bitcoin. They haven't been able to buy Bitcoin with previously. So, the landscape will be a little bit different if those ETFs are approved. But, in general, I think the negatives of the ETFs kind of don't outweigh the positives, but I see it as kind of a big nothing burger. Maybe it'll contribute to the hype, and that'll contribute to the parabolic, the parabolic bull run. The SEC has some options on how long they can take to approve or deny these ETFs. Even if they do ultimately approve them, they can delay it for quite some time. So it may be around the halving or after the halving that these ETFs are approved, if they are approved, which would certainly contribute to the FOMO. But we've had plenty of FOMO. We've had the institutions are coming. The institutions are coming, for years. If you remember the 2017 bull run, even after the crash in 2018 when Bitcoin was below 10,000 again, we had people out there saying 100,000 by the end of 2018. You remember Charlie Lee was all over the place forecasting, 20,000 by the end of 2018, most of which based on the whole concept of industrial and institutional FOMO. So the more things change, the more they stay the same, right? So that remains to be seen. Speaking of the bottom, Adam Meister did a Bitcoin, his one Bitcoin show last week. As you know, Adam Meister is an OG. He used to do a one Bitcoin show every day and a This Week in Bitcoin every Friday. And a year or so ago, he stopped that and started only doing shows if somebody gave him enough money to do a show. Cumulatively, I think it's $100 that he needs to raise a new show. He went ahead and did one last week, even though they were still short. They were still short of that goal. I think his justification was that somebody had sent him some merchandise, and so he was doing a free show because of the merchandise. However, during that show, he did officially call an end to the bear market. He said that the bottom was officially in, and his definition was that when we double the low, when we double the cycle low, that's when the bear market's over and the bull market has officially begun. I was actually a little bit surprised that he did that because I thought the last time he mentioned that his numbers were not only 32,000, but convincingly 32,000, not like it hits 32,000 for a couple hours and then retreats, but like it hits 32,000 and then surpasses it. So we'll see if that call is correct or not. I think we're always in a bull market. If you zoom out and to the right, Bitcoin's been in a 12 or 13 year long bull market. But when you look at it on the smaller scale, obviously we have had a bear market, and I think if you look at it compared to 2019, there is a distinct possibility we are doing a repeat of 2019. If that's the case, then it would be perfectly reasonable for us to retest the cycle lows, below $20,000. And I'm not saying that will happen. I'm not saying it won't happen. I'm just saying I think right now is a little too early to call the end of the bear market, the beginning of the new bull market officially, because it's sooner than it should happen if you go by the 210,000 block or 4-year cycle theory block, or at least when you compare it to 2019 when we saw that pump from 3 to 13 and then back to 3. And all of that happened in the calendar exactly where we are if we were at this point, at this block in 2019, in lieu of where we are today in 2023. Also in the news is the Wyoming Stablecoin Act. According to the Wyoming State Auditor's Office, the Wyoming Stable Token Commission was established with the passage of Senate Enrolled Act 85, the Wyoming Stable Token Act, which authorizes the Wyoming Stable Token Commission to issue Wyoming stable tokens. They go on to say that this will benefit Wyoming's permanent fund, and if they do so, they hope to do so by the end of the year. Does it really have anything to do with Bitcoin? Maybe, maybe not. It's obviously an S-coin. Everything other than Bitcoin is an S-coin. It's just another altcoin. Some people say stablecoins have their purpose. I say that purpose goes completely away when hyper-Bitcoinization occurs because, once Bitcoin has reached its mass adoption, once Bitcoin has become the reserve currency of some of the world at least, then the markets will have reached their equilibrium. They'll have finished their price discovery. They'll have settled on a fair price, and Bitcoin will become a lot more stable, and stablecoins will therefore lose their entire reason for being. But either way, some people look at that from anything that puts Bitcoin in the news is good for Bitcoin and helps with Bitcoin adoption. So look at it through the lens that you choose to look at it through. It could either be the state of Wyoming getting in on shitcoins, or it could be something that will help bring Bitcoin back into the news and help with Bitcoin adoption. Also in the news, and also speaking of El Salvador, the IMF has capitulated on Bitcoin in El Salvador, apparently. If you remember, after El Salvador adopted Bitcoin as legal tender, the IMF and multinational organizations in general were just unloading on El Salvador for how reckless this was. They did everything from the he's going to bankrupt El Salvador to he's a dictator to the IMF instituting rules where if you wanted an IMF loan, your country had to adopt anti-crypto regulations. Apparently that softened a little bit with the headline in Forbes saying IMF suddenly flips on crypto as Wall Street fuels a $200 billion Bitcoin, Ethereum, and crypto price rally. And Decrypt with their headline, IMF capitulates on Bitcoin, says they're not effective. So that the article goes on to say the IMF have changed course, now saying that crypto bans may not be effective in a new report released Thursday. Surprise, surprise, bans are not effective. That's not the IMF conceding defeat to Bitcoin, but at least acknowledging the obvious. And maybe they're just prepping because they know Bitcoin's is getting ready to go on its next euphoric face-melting bull run. And if it does, they're just going to look like idiots for saying how horrible it was El Salvador adopted Bitcoin as legal tender. If Bitcoin's worth $100,000 a coin and El Salvador becomes one of the wealthiest nations in the country as a result, they would certainly have egg on their face. So they're hedging a little bit. Now they can say, oh, well, we changed our mind. We lived and we learned, right? But just remember that until recently, the IMF was demanding El Salvador reverse its Bitcoin as legal tender law. And they put a tremendous amount of pressure on Central African Republic to bail on their Bitcoin as legal tender law, which they did. But of course, before that, we found out that the Central African Republic was actually more interested in issuing their own crap coin than dealing with Bitcoin. That was all just PR for them. And speaking of calls for bull run, Dr. Jeff Ross, who had been Dr. Crab recently, first Dr. Bear and then Dr. Crab, is apparently now Dr. Bull again. On the Cafe Bitcoin podcast the other day, he was saying that he thinks Bitcoin's going to stay in its current range for a few days and then have another push to $37,000 to $40,000. Who knows? Anybody that's drawing lines on charts or reading the tea leaves is doing just that. It's witchcraft. Nobody really knows anything other than the fact that Bitcoin eventually goes up and to the right. But it is one more person out there publicly saying the bear market is officially over as far as Bitcoin goes. All of which makes me a little depressed because I want to buy as many sats as possible because I firmly believe that when we set a new all-time high, we're never going to have the opportunity to buy anywhere near this cheap again. And I don't think I'm going to have as many sats as I need. Everybody sets their first goal. Somebody on Reddit the other day was saying their goal is 0.3 Bitcoin, 30 million sats, and that they didn't think they would ever get it because Bitcoin was going to get too expensive and they had only so much fiat to invest. And as the price of Bitcoin goes up, the number of sats they got for their US dollars is going to go down. And eventually that'll work out to basically them never being able to achieve their goal. And I actually replied, I said, just keep stacking. That's all that matters. But one thing that seems to happen to everybody is everybody has their goal, whether it's a half a Bitcoin or whether it was 1 Bitcoin or whether it was back in the day, it was 50 Bitcoin when that was more achievable. And as soon as you hit that goal, your goal changes because even if your goal seemed like a tremendously large goal at let's say your goal was 1 Bitcoin, even if your goal seemed like a tremendously large goal, you start thinking about, well, if this is the world's reserve currency and this is supposed to be generational wealth, is even 1 Bitcoin enough? And then maybe you move that goal to 2 Bitcoin. And if you're lucky enough to achieve 2 Bitcoin, then you think, well, even if Bitcoin hits $1 million, that's only $2 million. When they say the average American needs more than $2 million just to survive in their retirement. And if you get sick and have $1 million worth of cancer treatment or, heart surgery, then all of a sudden that money's gone. So maybe I need 10 Bitcoin or all I'm saying is that number continues to change, and what you might think is a large stack of Satoshis for your goal right now, once you achieve it, it will seem like it's not enough. So stack as hard as you can, and doing so now will let you be able to stack more than when Bitcoin has set a new all-time high. Speaking of clown world, you've probably already heard this, but it's really funny to watch everybody played the inflation blame game. As you remember, first we weren't going to have inflation, then inflation was going to be transitory, then inflation was good for you, and then inflation was caused because companies were price gouging. And now, apparently, according to the Daily Telegraph, inflation was caused by the video game Legend of Zelda, with the headline, Legend of Zelda computer game release blamed for shock inflation spike, which HSBC senior economist Chris Hare said today's surprise announcement that core inflation rose to 7.1, the highest for 31 years, was fueled by a spike in demand for live music events, package holidays, and computer games, including the release of the popular game Legend of Zelda, Tears of the Kingdom last month. So fiat idiots will continue to be fiat idiots. In Sweden, they were blaming inflation on Beyonce, with the headline in Sky News, Beyonce blamed for surprise inflation in Sweden. The article goes on to say, it appears that demand for hotel rooms and restaurant bookings was so intense that it pushed up official inflation statistics. Michael Grøn-Dansk, Danish Bank's chief economist for Sweden, tweeted, Beyonce's start of her world tour in Sweden seems to have colored May inflation. The exact amount is uncertain, but estimates that 2/3 of the 0.3% increase added by, that it amounts to 2/3 of the 0.3% increase added by hotels and restaurants. And in countries where Beyonce is not on tour and where she hasn't even toured yet, they're shifting that blame to Taylor Swift, saying the upcoming Taylor Swift concerts are going to be causing inflation. And last but not least, there are headlines out there saying that actually what caused inflation was climate change, because climate change has gotten so bad, everything's expensive because, weather. All right. Coming up in July, it's rumored we're going to have the official release of FedNow. There's a lot of conspiracy behind FedNow, a lot of different opinions. Is FedNow an attempt at a CBDC? No, FedNow is not a CBDC, is the other half of that coin. My personal opinion is correct. FedNow is not a CBDC, but that is because the Fed is perfectly happy with what they have. Yes, it's not a CBDC, but it is a direct response to Bitcoin. They are only making, quote unquote, minor improvements that Europe has had for decades. All they're basically attempting to do with FedNow is basically speed up settlement, make settlement of US dollars instantaneous, which is something that obviously Bitcoin does and was something that they've had in Europe for decades. But they're only doing it now because of Bitcoin. They know their quote unquote customers well. And they think that this is the only benefit that Bitcoin provides you, that instant settlement is the only reason anybody's using Bitcoin, as if we didn't already have a de facto instant settlement with, Cash App, PayPal. Obviously, all that money doesn't settle instantly, but that's behind the scenes. And to the average Cash App user, if I Cash App you money right now, you have it. As far as you're concerned, you can spend it. You can do whatever you want with it. Whatever happens behind the scenes with the banks, out of sight, out of mind, right? So all they're trying to bring to the table is instant settlement. They think that's going to be enough to kick the can down the road. So no, FedNow is not a central bank digital currency, but it's not them capitulating either. It's them thinking that they can make this little tweak and maintain their fiat monopoly far enough into the future that it won't matter to them. Jerome Powell will probably be worm food well before the US dollar collapses, they think, if they can keep kicking the can down the road. And speaking of idiots, Nassim Taleb was on television making an utter fool out of himself the other day, and that's really shocking to a lot of people, considering that Nassim Taleb wrote the foreword to the very first edition of the Bitcoin Standard. He was a Bitcoiner, etc. People wonder what the hell happened to Nassim Taleb. The speculation is that he's really salty. Maybe he sold at the top thinking he could buy back when it was lower and missed his opportunity. I think Nassim Taleb is incredibly easy to read. Nassim Taleb is a contrarian. Obviously, he was always wanted to be a contrarian. He was a contrarian when he was the sky is falling type when he wrote The Black Swan. First, he was pro-Bitcoin because it was contrarian. And, he thought he could be the smug contrarian in the room by being a pro-Bitcoiner. But now the Bitcoin seems to be succeeding. He has to hate it to continue to be a contrarian. It's kind of what I like to call the psychological vampire mentality. There are certain people out there who it seems their entire sense of self-worth is derived by going on television and telling you how stupid they think everybody else is. Not how great they are, but the reason I'm important is because you're an idiot, or because you're dumb enough to buy Bitcoin, or you're dumb enough to believe in whatever. And so I think that's Nassim Taleb in a nutshell. He's a psychological vampire. He's a contrarian. His only sense of self-worth is derived from getting on television and telling you how wrong you are. And so since Bitcoin is succeeding and he knows it's succeeding, he has to be a contrarian. It falls perfectly in line with him if you look at him from that frame of reference. What is different, though, is now he's clearly getting old and easily flustered, hence the horrific performance on MSNBC. He had almost a Joe Biden-level hard time articulating himself. I'm having an easier time articulating myself, and I remind you that I'm on heavy-duty prescription painkillers right now. So maybe the show is going Nassim Taleb horribly. To me, it actually seems like it's going surprisingly well. So either that's the painkillers talking, or I'm managing to power through them. Oftentimes when I watch a podcast or listen to a podcast, I'll hear somebody say something and I'll know what they mean, but they'll say the wrong word. Like instead of Bitcoin, they'll say dollars, or they'll say a word that means the opposite of what they're saying to mean. And everyone's like, you idiot, what did you say? Or if they've got a co-host like Matt and Marty, Odell will call Marty Ben out and say what you said. He's like, no, I didn't. And it's like, no, play it back. That's what you said. And I've found that if I go back and listen to my podcast, there have been a number of times in almost every episode where I've said something that's made me cringe because, I think last episode I was talking about Bitcoin faucets and I referred to them as fountains because I had just been talking about the Fountain app. And so I mentioned that there used to be a thing called fountains and it was faucets is what I meant. And that's just an example of the thing that that I've probably done over and over again this episode. And if I have, I remind you to cut me some slack because the fact I'm even standing here doing this podcast is pretty amazing considering the epic level of pain I'm in, even with the painkillers that I'm taking, which are dulling it a bit, but also dulling my ability to articulate myself. So with that said, let's get right to it. The real reason we're here is not because it is Elon Musk's birthday, but because it is DCA Wednesday. And if you're just following us for the first time, DCA Wednesday is short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, this is going to be our 101st stack. We've stacked 100 times already, starting all the way back on Wednesday, July 28th, 2021. Those 100 stacks have netted us a total of 6,950,380 sats. And that was we converted a total of $2,000 including $45 in fees because we use Cash App to stack and Cash App does charge about a 2.25% fee. Our average cost basis for all of those Satoshis was at an average price of $28,775.41. So for the first time in a long time, we were in the green. I think it was Wicked on Cafe Bitcoin pointed out last week that for the first time in a long time, every single person that's been dollar cost averaging is in the green. It doesn't matter when you started, if you started at the all-time high or if you started, 10 years ago, you are in the green. Everyone who's DCAing weekly is in the green, and that includes us. Those people who were not in the green would be those of you who would have YOLO'd in on July 28th, 2021, instead of DCAing. If you had taken that $2,000 on July 21st, you would have more than a million, almost 1.5 million fewer sats than we have by DCAing. So not only are we in the green, we've stacked a heck of a lot more sats. And we're going to add to that today. Not as many as we would like to add because Bitcoin's up above $30,000. But we're going to add about 65,000 Satoshis regardless. And every little bit counts. So to do that stack, we're going to open up the handy dandy Cash App. I've already got money in Cash App because I have money in Cash App, which I like to say I normally don't, but it seems like I have for the last couple episodes. Click Bitcoin, click buy. Cash App is messing with me because $20 is not an option, so I'm going to manually enter $20. It should know that I always invest $20 and keep that as an option. It seems to change, mix it up. Maybe it's trying to mix things up for me and encourage me to invest $25 instead of $20. But I'm going to buy $20 of the Bitcoin, hit confirm, and boom, just like that, we purchased another 64,902 Satoshis. That is one sat more than we purchased last week. Exactly one sat. Last week, we purchased 64,901 sats because we purchased at a price of $30,122.35 as opposed to $30,122.70 last week. So almost exactly the same price as last week. And that is going to bring our stack up to 7,015,282 sats. And that is really cool. That answers that other question. When people say, are we too late? What if I only have $100 to invest? Is it even worth it? We've shown that in less than 2 years, stacking just $20 a week, an amount that almost anybody should be able to come up with. The vast majority of my listeners, regardless of where you live and what you do for a living, should be able to scrounge up. Maybe some of you, $20 is an earth-shattering amount of money. But for most of my listeners in the United States, in Europe, it's actually a very small amount of money, especially with inflation. That'll barely buy you a hamburger at McDonald's these days. I think the last time I went through a drive-thru, it was $15 for one person, just for a crappy fast food burger meal. So just for basically the equivalent of going to McDonald's and maybe ordering a shake instead of a Diet Coke, we've stacked more than 7 million sats, and that's really cool. Most importantly, we've stacked that now. This did raise our average cost basis a tiny bit. We've stacked that at an average purchase price at $28,794.28, about $19 more than last week, because unfortunately, as the price of Bitcoin in US dollar terms goes up, it means we're getting fewer sats, and it's going to increase that average cost basis. But, none of that's really going to matter when Bitcoin sets a new all-time high. For example, if Bitcoin does moon and go to $1 million US dollars per Bitcoin, just that stack of 7 million sats will be worth $70,152.82. And I don't care whether you're in the United States, Europe, or in Africa, or in Central America. 70,000 US dollars is definitely a significant amount of money. I'm going to say to any one of you listening out there. I mean, even Elon Musk or Bill Gates, if they had an extra $70,000, maybe they'd blow it on rocket fuel for a trip into space or whatever, but it's still a decent chunk of change. It's not something that they would drop on the ground and just keep walking and leave it laying there because it didn't matter to them. And to the majority of the people on Earth, in the United States, they say that the average American does not even have $500 in their savings account. So it's 140 times more money than what the average American has in savings. And even if Bitcoin only goes up to $100,000, we will have turned that $2,000 into $7,015.28, which is, more than double, almost quadruple. And, this isn't about getting rich. This is about retaining our earnings, about keeping your wealth, building your wealth and keeping your wealth, keeping your fiat wealth from melting away like an ice cube. And so let's say Bitcoin goes up to $100,000 next year. In that time, if you invested $2,000, if you had $2,000 in cash sitting in your savings account at 10% inflation, that would be worth $200 less. So your $2,000 would only be worth $1,800. But since we've turned it into Bitcoin, it would be worth $7,000. So that's going the exact opposite direction. Not only is it a hedge against inflation, hopefully because we're getting in early, it's more than just a hedge against inflation. Hopefully it will become intergenerational wealth one day, something that you could leave to your kids or your grandkids knowing that their future will be secure, as in lieu of them being fiat slaves and their future being stolen from them by central bankers. All right, now's the time on this podcast where I ask you to help support us, and not by sending me money. Of course, if you do want to send a boost or tip us, that would be freaking awesome. I would appreciate that. But what I would appreciate as much, or maybe even more, is if you just give us a follow on Twitter. On Twitter, we are at BTC Bulletin Pod. That's at BTC Bulletin Pod. And we don't have a whole lot of Twitter followers. So if you do follow us on Twitter, it would be nice to get a DM from you and hear what you like about the podcast. But just that act of following us is going to help feed that algorithm monster, where it's going to make more people more likely to be able to hear about us. Hopefully somebody will see us on Twitter because you liked us on Twitter, and that will help orange pill them, and that'll help start somebody on their orange pill journey. If you don't have Twitter, you can always send me an email and let us know what you think. Again, our email is bitcoinbulletin@protonmail.com. But also, a favor I'd like for you to ask is if you could rate this episode. Of course, if you follow us on your favorite podcasting app, set us up for automatic downloads. That helps promote the podcast. And if you give us a 5-star review, that helps promote the podcast as well. I don't make any money off this podcast. You may have noticed we don't have any sponsors for this podcast. Every once in a while, somebody out there will send us a few sats as a boost, which is really appreciated. That's fantastic, mainly because, I know you listened. I know who you are, and I can visualize you, and it helps me feel a sense of gratitude knowing that I'm appreciated, that this podcast is appreciated. But what's more important is that you help us spread the word about this podcast, and following us on Twitter or giving this podcast a review on your favorite podcast app will help feed that algorithm monster and help it get promoted to more people. The more people that find out about this podcast, the more people that might be thinking I'm too late or I don't have that much money. And then they could hear me talk about investing just $20 a week and building 7 million sat Bitcoin stack and think, maybe that's for me. A lot of people don't know that you don't have to buy a whole Bitcoin, that you can buy as little as $1 worth of Bitcoin. So help spread the word. That's the biggest favor you can do for us. But either way, I would like to hear from you. So please give us that follow on Twitter at BTC Bulletin Pod, or send me a DM and let me know what you think about the show. I have some interesting ideas, some exciting things I'm planning for the podcast in the near future. And hopefully you can give me some more ideas about what you like or do not like about the podcast. Again, we're also on Nostr. I'm not going to read out our Nostr public key, but it's in the show notes. So if you're on Nostr, you can follow us on Nostr as well. And of course, you can always email me at bitcoinbulletin@protonmail.com. Perhaps most importantly, please join us next Wednesday and every Wednesday while we continue to grow that stack together. But until that time, keep on stacking those sats, you sexy sat stackers.